Welcome back, entrepreneurs. Today we're going to be talking about one of the most important documents in the series of financial statements, and I would call that the balance sheet. At any time, it's going to give you the pulse of your business and how it's doing and what are the growth potentials for you. All right, so let's jump into this balance sheet, right? Most small business owners, they really feel lost when they look at, really all their financial statements, but somehow, the balance sheet is one of those that are just ignored. And sometimes it's ignored so much that, they'll outsource it to maybe a CPA, right? And they'll outsource it maybe to their internal software. And that both of those are great solutions, right? The important thing is that whether it's coming from your software or it's coming from your CPA, that there's a review process, right? That you're looking at that information. And I think the best way to learn this is to really break it down on what the necessary steps are to create a balance sheet. When you have a somewhat of an idea, then you're going to understand, and you're probably going to embrace more, going to your computer, right, and downloading a balance sheet for yourself, or when your accountant gives it to you, you'll look at it, you'll have a better idea, and you'll understand it, so to make better decisions. So, step number one in any financial statement, including the balance sheet, is gathering of information, right? We need data, and we need good data, right? Junk in, junk out. So we need really good data. And what does that data entail? Well, it actually entails everything. And I'm going to draw a little contrast here, because with the P&L, right, a lot of small business owners, as they collect the dollar, right, they book it. So you say, you know what, I got a dollar from this client. So if you ran a P&L statement, it's going to say $1 revenue. And if you paid 50 cents outright for supplies, it's going to say, 50 cents. So at the end of the day, it says, hey, you made a profit of 50 cents. The balance sheet is going to go a little bit deeper, because the balance sheet is going to say, hey, who else have you invoiced that hasn't paid you? What other supplies or inventories or, expenses, insurance, interests, what other things do you have that you haven't paid for that wouldn't show up in a balance sheet? So you can see already how these two financial statements, side by side, can be very powerful, because one tells you, hey, this is what happened at the moment, and this is what you have. And this one here is saying, this is the entirety of what's happening in your business, of what's happened and what's going to happen. So it's really, really important that we feed it as much information as possible. Number two is, as I mentioned, there's this breakdown in the balance sheet. We have current assets, we have long-term assets, we have fixed assets, we have liabilities, current liabilities, long-term liabilities, right? And of course, then we have the equity section, which is what is left over. And I'll break this down. Current assets are things that are very liquid, right? It's cash, it's your accounts receivable, right? Most people's accounts receivable in 30 days, they're collecting from customers. It's things like that. If you have investments, maybe, stocks or bonds that your company's holding money in, right? Extra cash. Those are all things that are readily, convertible into cash. If your business held some, real estate or other types of investment, those are not, liquid immediately. So those are long-term assets. And the same rules apply, right, to your liabilities. You have your accounts payable, where you might buy inventory or supplies or something like that, and your vendors expect you to pay them 30 days or sooner, right? You might also have equipment loans that, maybe you paid $10, $20, $100,000 for. Those obviously, wouldn't be paid 30 days out. Those might be 2, 3, 4, 5 years. Those would be long-term liabilities. And of course, the difference between all assets and all liabilities is your equity, right? That would, to simplify it, right? If you liquidated everything, you would have some equity left, hopefully, in terms of walking away with your company. And number three, in really just embracing the balance sheet, is we have to look at it. As I mentioned earlier, we have to review it. And once you start building this muscle, right, after 1, 2, 3, maybe 4 or 5 months, you're looking at it, you begin to get curious. We have to get curious. We can't just look at a number. It says $1,000 of current assets. Well, we might want to unpack that, right, and see what that 1,000 of current asset really means to us. So get into the habit of doing that, and you're going to start, this is the first step in helping you make a lot better decisions in your company. All right, so now let's talk about, make a little shift here on how to use your balance sheet to make better decisions. And here's how you can start today. And a lot of small business owners, by the way, they go with the gut, right? Listen, sometimes it works and sometimes it doesn't. And when it doesn't, it's brutal. It hurts, it's painful. But if we have a tool, right, that can help us make better decisions. Listen, even with any tool, right, sometimes we're going to strike out. Sometimes we're going to make the wrong decision, right? But again, if we can cut down on some of those mistakes that could have been eliminated, why not? And why not do it by using a balance sheet? So how can a balance sheet help you? Well, it's going to help you make better strategic decisions, right? If you're thinking about, you know what, I want to buy that new piece of equipment, the balance sheet is going to talk to you because you're going to look at it and the balance sheet is going to tell you how much actual cash you do have, right? Because you can go to the bank and your bank balance, right, online banking might say, you got $36,000, but your balance sheet might say, hey, listen, you got all these checks that you wrote that people have in cash. Your balance is actually 18,000, right? So all of a sudden you're spending money that you don't have. So that's how the balance sheet is going to help. It's going to make you just make much better strategic decisions to find the opportunities that exist. Number two, listen, it's an accumulation of the positive and negatives of what's happening in your business. When you open up that balance sheet, right, and especially if you compare it month to month, year over year, and you say, listen, January 31st, I had, $80,000 in cash. Now it's March and I've got $43,000 in cash. The balance sheet, that's going to talk to you. It's like, what's going on? I don't see that happening because my P&L says I've been making sales of $100,000 every month. Why is my cash so low, right? Well, could it be that your customers aren't paying you? Could it be you have a problem with your collection, your accounts receivable? So this is going to prompt you to look into things like that so that you're catching the good and the bad on time. And of course, what a great tool to mitigate against risk, right? And we go back to sometimes we make decisions that, come from the gut, right? We're going to make big decisions. I'm going to buy this equipment that's $100,000 or $200,000. We need to make sure that we can support that debt, right? We need to look at, what are all our assets? What are all the liabilities that we have? And, from day one through day to day, how much have we accumulated in earnings, right? Our equity in that balance sheet that's going to support us buying some equipment, buying a vehicle. The balance sheet is a tremendous tool if you use it. It's going to help you make the best decisions for your business, life and career. And when you power that up with the P&L, you're going to be unstoppable. Well, you're on your way to mastering one of the most important financial statements that you're going to add to your business arsenal, and that is the balance sheet. What you have to remember is that the balance sheet it's not just a snapshot of your business finances as a particular moment in time. It's a roadmap that's going to show you where you've been, where you are, and I think most importantly, where you could actually take your business to. So it's important to keep accurate records, keep them clear, keep them clean, keep them updated, and probably the most important thing, make sure you're reviewing your numbers and your balance sheet so that you can make the most informed decisions possible. And that's how you're going to drive your business forward. Listen, if you've liked this video, make sure you like it. Make sure you subscribe it. If you have some friends that are entrepreneurs, share the video with them. And here's to, a thriving business built on solid financial foundations. And you're going to do that through understanding the balance sheet.